Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock. We'll be going over their latest news updates, what professionals believe this company could be worth in the future, if right now is a good buying opportunity, if their approaching earnings report will be positive or negative, and what this could mean for their overall share price. We're also going to talk about a recent catalyst that has come up regarding NIO's further infiltration in the European market. So for more NIO stock news, remember to go and annihilate that like button, subscribe if you are new, comment down below your thoughts, and without further ado, let's jump right into today's stories. NIO, if you didn't know, is an electric vehicle company located over in China, and as of right now, they trade for around $10.03. Over the last month or so, they've actually lost around 15.51% of their overall value regarding their share price. So is this a good time to buy this company? Well, let's look further into it. This would depend on the current projections pertaining to their upcoming earnings report, because many investors believe that NIO will display strength on their upcoming earnings report, which is expected to be on March 1st of 2023. Now, clearly, if they have a bad earnings report, the stock price could suffer and trend downward, but if the earnings report is very positive and they have better deliveries and better overall production numbers, then the share price can clearly increase. So that begs the question, is this going to be a positive or a negative earnings report? Well, NIO currently right now, based off of various professionals' ratings, do not have very positive estimates for their approaching earnings report on March 1st, which is why Zacks Rank actually has a sell rating on this company right now. But this is only one institution. What do other professionals and experts think about this particular company? I honestly think that this company could bring in an earnings beat or a revenue beat, which could invigorate investors and increase their overall share price, especially after NIO has lost around 60% of its overall value in a short amount of time. This just gives investors a better buying opportunity in this particular company. Over the last year, the NIO stock price has lost around 60% of its overall value, and this is mainly due to macroeconomic factors and nothing that's inherently wrong with the company itself. For instance, the electric vehicle company has been hit hard due to the government in China releasing very restrictive policies which have negatively impacted the overall NIO share price. This then led to a softening demand for NIO's overall vehicles to where not many people were buying their overall electric vehicles for the last few months, but many investors believe that the Chinese government will start to open back up, and as their economy opens back up, this is going to release a huge wave of demand for NIO vehicles. So this could be a great opportunity for very risk-conscious investors to buy the dip on this company, or should investors stay away from this company, at least for the next few quarters? Well, let's dive into this article and find out. China, if you didn't know, is by far the largest electric vehicle market in the entire world, because they're responsible for around 2/3 of the overall global electric vehicle sales worldwide. And the Chinese government aims to make electric vehicles represent close to 40% of their overall vehicles in the country by 2030. This then means that their citizens will be highly incentivized to buy electric vehicles, and the government is giving their citizens various incentives which would come in the form of tax breaks and other sorts of incentives. This is one of the reasons why investors believe that NIO stock could have a phenomenal comeback over the next year or two. However, NIO does face strict competition from other electric vehicle makers such as Tesla, BYD, XPeng, and Li Auto. For instance, let's just focus on Tesla, which is one of my favorite electric vehicle companies. Tesla is aggressively infiltrating the overall Chinese electric vehicle market, making Tesla one of the top competitors that NIO will have to deal with. Now, what's great about this is that NIO's vehicles are not only more luxurious than Tesla, but also a lot cheaper. So this does give them somewhat of an edge. However, Tesla's overall brand awareness and technology seems to give the broader edge over to Tesla. However, NIO does have one particular thing that differentiates them from their competition, including Tesla, something that other electric vehicle makers haven't been able to reproduce. And that would be that NIO's electric car batteries can either be charged or completely completely changed out. NIO has various stations where a machine will automatically swap out your used vehicle battery and replace it with a fully charged battery at one of their network swapping stations. And this swap only takes 3 minutes. This is substantially faster than the 15 minutes it would take to charge a Tesla for only 200 miles at a supercharging station. This has then led to NIO having a very innovative business model, but overall, NIO has performed quite poorly over the short term, and many investors are honing in on how unprofitable this company is, even though they are bringing in billions of dollars worth of revenue. For instance, in the third quarter, NIO's revenue jumped by 33%, which is good news, to where they brought in around $1.8 billion. Now, investors are actually excited about that, but they are more concerned with the company's overall net loss, because the company's net loss ballooned by around 400% to $578 million. And that clearly puts a damper on things, because we would want their net loss to lower as time goes on, so it puts them up closer to profitability, but instead it seems that they are walking away further from profitability. Now, I personally think throughout the future this will change. However, we're just going to have to wait and see, and their upcoming earnings report will tell us what we can expect in the future. Another thing that I personally like about NIO is that they are backed by the Chinese government. Literally, the Chinese government will not allow NIO to go bankrupt, and they've already proved this to investors, because back in 2020, the Chinese government gave NIO a $1.4 billion bailout to prevent NIO from going bankrupt. So investors really need to understand that this company is not at risk of going bankrupt. However, there is a lot of risk considering that this is a foreign company located over in China, to where if there is any political problems between the United States and China, this is going to cause the NIO stock price to absolutely plummet. Investors also need to expect in the short term massive losses to worsen for NIO, especially as their competition heats up. Now, again, what I like about NIO is that they have a low price to sales multiple, which is only 2.8. This is significantly cheaper than a lot of their competition, which would include Tesla, because Tesla right now has a PS ratio or a price to sales multiple of 8.6 times their overall revenue. So with that being said, we need to make sure to understand that NIO has a very innovative business model, that their battery swapping stations are much quicker than superchargers, but the company does have a lot of cash burn, and they are still unprofitable, with them becoming more unprofitable as time goes on. But I think this company could achieve a reversal after this year, probably in the year of 2024. So where does this leave investors overall for this company? Is this company good, or is this company not good? What can we anticipate for their upcoming earnings report, and will their European catalyst send the stock price surging? Well, let's talk about that. From a recent Reuters report, we know that NIO is planning to build their own factory so they can export cars more effectively in Europe, which should ignite the NIO stock price. The reason why this is very interesting is that normally NIO relies on other manufacturers to build their overall vehicles. One such manufacturer would be JAC Motors, or JAC Motors, as some call it. So this could put NIO's relationship with JAC Motors at risk, considering that NIO also wants to make their own facilities to produce their own electric vehicles. Now, I personally do not think this is a risk, because JAC Motors is going to take NIO's money if NIO continuously pays JAC Motors to produce their vehicles. Why wouldn't NIO continuously outsource their overall production to JAC Motors while they are building their overall production facilities, or even once these facilities are running? So in the end, I think this is actually a positive development for NIO, considering that once NIO has their own plant, it's going to be less dependent on other third parties such as JAC Motors. Something to keep in mind though is that JAC Motors also has a joint venture with Volkswagen to make smaller cars. And since electric vehicles have fewer moving parts than gasoline vehicles, we know that JAC and Foxconn are also trying to enter this market to help other electric vehicle manufacturers. Now that you know this information, overall, I don't think that this will impact NIO's relationship with JAC Motors, and I think this is going to be a positive for their overall share price. So what's going to happen now with NIO stock? Well, we're honestly just going to have to wait and see for March 1st. We have some professionals that believe the developments in this company are going to be very positive, which could cause the share price to increase, and then other professionals believe that NIO will miss on their estimates, which could negatively impact the overall share price. I honestly, for this upcoming earnings report, report, don't know. But then again, I'm not overexposed to NIO, so it really doesn't matter to me what happens to this company over the short term. But regardless about what NIO could bring in for their earnings report, investors need to understand that NIO does have a lot of money on their balance sheet, meaning they have around $2.5 billion worth of cash and or cash equivalents, which means that NIO could survive the next few quarters even with their high cash burn rate. So as long as NIO can survive and they're not at risk of going out of business because of the Chinese government, this company over the long term could be a good investment opportunity. This stock could make investors a lot of money, but there is huge short-term risk here that you need to be aware of. Remember, geopolitical tensions are going to impact this company very negatively if tensions increase. And considering that China makes up 2/3 of EV sales globally, I don't think that's going to be a problem, considering that there is plenty of market share to go around for companies like NIO, Tesla, BYD, Li Auto, XPeng, and others like them. At the end of the day, this does seem like a speculative growth stock, and if you are a short-term investor, don't anticipate that NIO is going to pay off over the short term. If you don't have a long-term outlook for this company, you could get severely burned. I also want to make sure you're practicing proper risk management by not overexposing yourself to a singular risky growth company. I normally abide by the rule of I don't allocate more than a 5% allocation to any singular risky growth company in my entire portfolio. There are other electric vehicle companies on the stock market right now that you should feel free to diversify into. Now, the good things about NIO is that as they further diversify themselves and their revenue streams over in Europe, that is going to positively impact this company. On top of that, they are looking to release new vehicles and they have upcoming catalysts which could positively impact the overall share price. At the end of the day, you have now been equipped with both the bearish and bullish views of this company, and now it's up to you to do your own research to determine if this company is good for your personal portfolio. Always remember to do your own research, subscribe if you are new, comment down below where you think the share price is headed, or if they will beat on their overall earnings per share or revenue in their upcoming earnings report. Smash the like button if you haven't already, and I will see you in the next YT video.